Why does the commercial real estate market tend to lag the residential market, at least in the U.S., both in terms of when it booms and when it busts?
It really has to do with the production cycle, and in fact, if you come within commercial real estate, you'll see it follows a logical pattern. A single-family home is, you're talking about a couple thousand square feet. In the South, where the weather allows you to easily build homes year-round, you can put up a single-family home pretty easily in 4 months if you want, 5 months, 6 months, from start to finish. You don't have to get way out ahead of demand. And remember, demand shortfalls, surprises, demand shocks are one of the problems. So the fact that there's a short cycle says when the demand falls, you see it immediately. Nobody comes out to buy a new home. Nobody comes out because it's a big ticket item. They're hesitant to go out and get a big ticket item. Demand falls very quickly, and it's felt very quickly on the negative side in the single family. But the good news is production slows down pretty rapidly because the pipeline is short. Only have like 4-month pipeline. So yes, there's some more supply comes online, but it's a pretty short pipeline, and therefore supply doesn't keep running. The exception to that are high-rise residential. And high-rise residential is once you're pregnant, you basically have to have the baby. Unlike a single-family home, if I'm on the 3rd floor of a 30-story building, I have to complete it. Suddenly I now have a building that takes 2.5 to 3 years to build, and secondly, I can't just stop after the 2nd floor. I have to keep going to get it enclosed and get the systems installed, etc. So that leads to the other distinction, which is how long does it take to produce something, and is it bite-size? So high-rise office buildings, for example, tend to be late in the cycle feeling negatives. Why? Because I've already got most of my space leased. The building's built. It's almost all leased. Times are good. I just signed a bunch of leases for 5 to 10, 15 years. So, okay, demand weakens a little bit, but come on, I only have 2% of the building up for lease this year, and 94% of the building is already leased. So, yeah, I feel a little softness, but it's only on 2% of my income. The rest of my income's okay. That's also why it lags on the upside, though, because then it means that for 4 years, on the way we're heading down and on the bottom for 3 years or so, I'm leasing at low rates, and those low rates keep me pulled down. Namely, yeah, now people are really starting to lease, and they're leasing at higher rates, but I've locked up 15, 20%, 30% of my building for the next 5 to 10 years at below the kind of rents I could rent at today. So long leases and the fact that it takes a long time to build commercial mean they're later in the cycle. Apartments tend to be, garden apartments tend to be more like single family. You can't build them in 3 months, but you can build them in 9 to 13 months. 3-story walk-up wood frame, you can build it in 9 to 13 months. So the supply cycle is relatively short. People still sort of come out, and in fact in a down economy you may even get a few more renting rather than buying, so it buffers a little bit the demand shortfall because people lost their jobs. And on the upside, they're all short leases, so when the market turns, I haven't tied my building up with a lot of my income coming from low rents. They turn over in a year or so. Hotels the same way. Hotels show the pain early in a cycle, and they show recovery soon in a cycle because they have very short-term leases. Not quite as soon as the single or multi because it tends to be a high-rise product, takes a little longer to build. So you can kind of go through the different property types, and each one has their own business characteristics that would suggest when it comes out of the market, reflecting length of lease and the time it takes to build a building.